Hello and welcome to Download. I'm your host, Dave Richardson, and it is the first Tuesdays of 2025. And I know, like they do New Year's Eve and all that stuff and fireworks and celebrations and people popping champagne corks, but I really think that people should be more focused on celebrating the first Tuesdays of 2025 because that's when the new year really starts to.
Yeah, we need some traditions that we can add to that. I'm sure we could come up with a song that would give it its proper due, right, Dave?
Well, we could come up with a song, but then we'd also have to come up with someone to sing it because
That's right.
I know my talent in that area. I'm just assuming, and maybe I'm making an assumption. Maybe you're just a songbird, but I'm thinking you don't have a great voice.
You're bang on. You would not want me singing at all.
Or we could have you with a spoken word part. Those are always exciting. I listen to a lot of progressive rock from the 60s and 70s, so it's you get
Yep.
those spoken word parts in there. It's always interesting.
Could be. Could maybe that'll be. Maybe we'll have some podcasts like that. We'll have a whole kind of poetry infused, famous quotes from different stock market participants, and I'll string
Yeah.
them all together.
What was that? What was that one show? It was like a police show, and they sang through the whole. It was like a musical police show that they
Is that
did in
Brooklyn?
the. No, it was.
Was,
Anyways, it was critically acclaimed, but I couldn't watch it. I don't want to listen to people singing, and even musical films are tough, I find.
yeah,
The nice thing though is I've got my Azorian background here,
it's
and this
beautiful.
this special Tuesdays is also our first Moose Day because I've got my little neighbor cow. If you look over my left shoulder here, you'll see the cow sitting in the background. So that's my neighbor here. It's a pretty exciting place. Now, more exciting is where we are in terms of markets as we head into 2025. We're doing a series, by the way, and this is where I make the marketing folks happy, Stu.
Yep.
Click subscribe if you're on YouTube, you're watching, if you're wherever you get your podcasts, subscribe, follow the show. We love to get more listeners, Stu. We were up 500% last year in listeners. Did you know that?
Is
They
that
gave me the stats just before Christmas, and we're up 500%,
okay?
and all 500% of them are someone's mother,
Yep.
and they listen. They like to listen to you. They'd like me to leave, but anyway, so click and subscribe. So apparently this marketing push I'm doing here is working. Click and subscribe and follow us. Give us a 5-star review because our mothers have. Somebody else has to give us a 5-star review. And what we're doing here, Stu, is a series of about 15 videos where we're looking back at 2024 and looking forward to 2025 and getting all the different experts from around the world to give their views on that. And I suggested to Stu that we do this, and he said, "Look, I've looked enough back at 2024. Let's look forward." So we've got a collapsing dollar in Canada. We got a prime minister resigning. We got a bunch of tariffs coming from the U.S. What else is going on there? Well, it's winter, so it's cold and snowy, and so that never makes anybody happy. What's that day in February where you hit your peak negativity because of all the bad weather and lack of light during the day? So you piece all that together, Stu, and how do we get excited or positive, or do we get positive about this year that's coming?
Well, it's yeah, like I think it's an interesting time because I've often talked in markets, you know, bad but getting less bad
Ah,
is as important. Just like good but not getting better is also important, and I think that might be the story, for different pockets of capital markets this year. And we're starting off on the Canadian dollar, where it's pretty hard to imagine a worse set of ingredients for sentiment. But we're doing it at a time when the currency folks think the dollar is Canadian dollar anyway, is pretty undervalued. So looking through this environment, is there the ingredients for maybe a better tone as we move into the end of the year? So we've got dysfunction in Parliament. We've had the tail end of a housing malaise. We have tariffs, as you say. Uh, one might be more tempted to think that this is a bit of a crescendo to the negativity, and that doesn't mean that it marks the bottom or that it's up and away. But when we get into these situations, we have to start thinking about something that might weaken 2 or 3% more, but could be 5, 8, 10% higher. We want to start thinking about those from a risk reward standpoint. So I do think, particularly for Canadian investors, thinking about the dollar in your portfolio is going to be more important. Thinking about, some hedged versions perhaps of funds is going to be more important. Canadians in particular have done extremely well on a lot of U.S. stocks where
Yes.
the U.S. stocks have been spectacular and the dollar's been kind of icing on the cake.
Yes.
And, I think, when we talk about, bad maybe not getting worse, we also have to talk about, is good going to get even better? Because some of those stocks have been, spectacular. And, some Canadians are going to want to think through that in their portfolio as well. We got a bit of a delay in the capital gains component, maybe. And, even though it's early in the year, is there the opportunity to kind of think through your portfolio a little bit? I think that always exists.
Yeah, and Stu, as you're looking out at the Canadian market, if we're talking about stocks, and again, we throw the U.S. in this because you're our expert on North American equities overall. What seems particularly exciting to you as we're coming into this year, and what are you a little bit more worried about? I know if you look at your own portfolio, you're likely pretty happy with where you've got it positioned right now. And so where do you see the real opportunities this year? And how do you have yourself positioned, or how do you think you're gonna walk through 2025?
Well, I think it's there's a lot of good businesses out there at reasonable prices, and I think the story will be, is the world economy going to do a little bit better? So crude had a pretty tough year last year. Can it have a better 2025? Natural gas certainly has benefited from the cold temperatures that you
Yeah.
talked about starting off, but some of the natural gas stocks look great. Can there be a bit of a change in perception in Canada around how we use our natural gas resource? That could be pretty interesting. We had some companies at the end of the year lay out kind of 2 to 3 year plans that look pretty good for their share prices, like the types of might be an airplane business, or whatever it might be, where you sit there and say, well, yeah, the next 6 or 7 months might be a little bit tougher, but as we get through that, uh, we see some chances for some pretty good returns. This morning, just on the kind of the Canadian consumer, Dave Mackay, the CEO of Royal Bank, at a conference was saying every 25 basis points of interest rate decline in this country, I think the stat was 7 billion of discretionary spending that finds its way back in. And yeah, there's been a lot of worry about the Canadian consumer, but maybe with some rate cuts, there can be some slightly better times 6, 12 months down the road. Unemployment in this country has been a little bit tough. Maybe some pressures will ease in the back half of the year on that front as well. So um, when we go through, these are fairly mundane businesses, but when we go through a list of fairly mundane businesses, we're normally getting pretty good current free cash flow or current dividend yield. We see the opportunity for growth, and we think we're supported by a lot of asset value. So we look through the portfolio and say, to borrow from Warren Buffett, whether or not the stock market's open, closed, or not, feel pretty good about some of the businesses that we own in that regard.
Yeah, and as we've talked about on many occasions, dividends are and Canadian stocks that offer great dividend opportunities are, some of them are among the best in the world.
Yeah, and it's interesting too. Like, you get to this time of the year, and lots of people use the calendar year end to go through their financial plan.
Yeah,
And I was doing something similarly, and I've owned the dividend fund for almost 20 years.
yeah,
And when I look at the expectations I kind of struck 20 years ago, it's nicely ahead of those expectations. So owning good businesses, paying you good dividends, growing those dividends over time. There's never the particular day where you say, "Oh, baby, that was a good one." But at the end of each year, you tend to look at the plan and say, "Yeah, we're on track here."
I usually leave this till the end, but I'm going to sneak it in earlier this time. I'm just wondering when you were looking at that dividend fund 20 years ago, and again relative to expect, did you just like dump every penny you had, like right then, and then never add to it, and you think it's done better because of that, or was there a particular approach that you used to accumulate the
Well, my
dividend fund that you own?
my New Year's resolution for the last 20 years has been dollar cost averaging. So
There
I
you
just
go.
keep it on the list. I just keep it on the list, Dave. And
And yeah, I know you think of people, are going to go to the gym more. I'm going to eat better food. I'm going to do all these different things, and most people fall down on that. Dollar cost averaging is about like it's pretty. You just make the decision, push a button, forget about it, and away it goes. It just flows in, and then like you say, you look back 20 years later, and you're kind of wow, I can't believe that.
yeah, got to pay yourself first, Dave.
Oh. Well, speaking of that, and another way you get paid is a bond market, and we've, I think the general expectation was that rates were going to come down across the board. As you mentioned, the Bank of Canada is cutting rates, and they've been ahead of the U.S. in cutting rates, which has been one of the factors in hurting the Canadian dollar relative to the U.S. dollar. Anyways, I know when I look at the Canadian dollar relative to here in Europe, it's flat. There hasn't been any move at all in the last year, but the you look at rates on the short end that have come down, but actually over the last 3 months we've been seeing longer term rates drift higher. We've particularly been seeing that in the U.S. Now, is that all bad news, or is that something you expect? Does that affect the stock market in any way in terms of relative valuation? What are your thoughts on longer term rates popping a little bit higher than maybe most people expected over the last few months?
Yeah, I think a couple of things. Like, the first off is, for the bond market itself, a couple of years ago when rates were rising, that was having a very negative impact on price. And when we get to 4.5% on the 10-year bond, and you start drifting by 25 basis points, it doesn't have the same impact, right? It's like 25 basis points of 1% is a much bigger percentage change than
Yeah.
25 basis points of 4.5. So when I look at the bond market and you look at the current coupon you're receiving and you look at the real interest rate that is now embedded, I'm not. It's not that you say I don't worry about it, but it seems like there's more protection there than there's been for some time. Even though we've kind of been bouncing around in this, call it 4 to 4.75 range on the U.S. 10 years. So I think that coupon protection is a little bit more interesting than in many years past. I think for the stock market, if say the 10-year went up another 100 basis points, went to 5.5, that total return basis would probably eat through, like, your coupon would pay for the decline in the price of the bond. 100 basis points would likely be a little bit more of a challenge for the stock market.
Yeah.
So, from a balancing standpoint, starting to see some interest in fixed income. I would say that there's a fair amount of bearishness on longer term interest rates to start the year. When you look at some of the sentiment data and what have you, it's kind of the reverse of where we start some sentiment data in the equity market,
Yeah. Yeah.
in all honesty. So, so I'm a little bit more favorably disposed towards fixed income.
Yeah, and so that kind of leaves you with, I think we get Sarah Riopel, who talks about where she positions her portfolio, and she's been neutral for a while, and although stocks have done very well, bonds have also done okay, and again, you want to position today for what you think is where things are going to go in the future. Fixed income looks, fairly attractive. There's still reasons to be in different parts of the stock market, and so that seems to be a prudent way to be positioned right now, given where we are with some of the risks that we're going to see coming into 2025, because there are risks there on the table.
Well, and every year you start the year and all the stats tell you there'll likely be a correction at some point.
Yeah.
So you might as well be prepared and thinking about it a little bit. There's as I say, there's a fair amount of optimism in certain areas of the stock market. So it's almost it's almost not a certainty, but it's almost likely we see some type of corrective activity this year, and we want to be there to kind of think through that and have money to put to work when that takes place. So anytime you're managing a portfolio, you can be neutral, you can be overweight, you can be underweight. Just to revisit one of the things on my wall is Butch Cassidy and the Sundance Kid, which was always a holiday movie that I used to watch with my dad. And there's a move there where Butch Cassidy says, "Can I move when I shoot?" And I just I shoot better when I'm moving, when I'm thinking through a whole variety of scenarios. And that's going to be the case, as it always is. It's going to be the case for 2025 for sure.
Yeah, and I guess as we talk about the yields going higher at the long end, and then what's going on at the short end with central banks cutting rates, and the Canadian Bank of Canada being particularly aggressive thus far in those cuts. So we talked about the good and bad, but one of the other good things about that is you've got a steep yield curve, you're steepening yield curve, which is generally a sign of what?
Well, it's normally right as the curve goes from inverted to negative inversion or to positive inversion. That's kind of the one of the sources of worry, which we kind of went through last year. Like
Yep.
today, the 10-year, the spread between the 2-year bond and the 10-year bond in the United States is almost 40 basis points. It was minus 40 this
Minus
time
40.
last year.
Yeah.
If you are a bank, if you are a financing company, a positively sloped yield curve is pretty good. It helps you make more money. Normally it means that eventually the economy is starting to respond, and that's why you're getting a positively sloped yield curve. So you get some loan growth, you get a variety of things. So it can be good. It can be good for sure for banks and other things, but it also means that you're getting some term premium. And going back to that area, like when we had minus 40 basis points of slope, there was not the same level of concern that we have today when we have 40 basis points of slope. So there is certainly some negative sentiment in the bond market that could provide a bit of a cushion.
Yeah, and so we enter, coming out of two very good years in the stock market. And I'd actually just sent you a chart. You open up
Yeah.
your email in a minute. That basically shows the S&P 500 returns year by year since 1874. And as you go through those returns, and it basically splits them up between starting 0 to 10%, 10% to 20%, and was positive and negative. You start to see there's not a whole lot of times that you have back-to-back years like we just had, where you get a 20+% rate of return. That third year follows through, but it's not impossible. And it's we did see it back in the 1990s.
Yeah, it's always hard to know. When you're getting a chunk of the return that's being driven by multiple expansion versus just earnings growth, it's harder to keep banking on that. Like in order to have another double digit earnings or return from here, we would really need a big acceleration in earnings growth. Um, I would be more tempted to sit there and say, I've got pretty good free cash flow yields on a variety of stocks, and I might get high single digit growth out of that free cash flow growth, and that's the way I'm going to get. Even if I get some multiple compression, I'll get an okay return. Um, and acknowledge in advance that it's likely to be a bit more volatile just because of the starting point than it may have been in years past.
Yeah, and we've been talking about that. I mean, one of the things that you'll see pretty much all the time is when things get expensive. And so when valuations are stretched, you see more volatility, which was one of the nice things when you can buy things cheaper, that you've got potentially more upside, and you do that with less volatility. And maybe this is the year that Canada finally steps up and starts to compete with the U.S. on a relative return basis. So as you say, all of this kind of just seemingly, wow, just over the holidays, just one bad thing after another in terms of news about Canada. Maybe that is a sign where you're getting closer to the end than the beginning.
That's right. Although we're at the beginning of 2025.
Wow. See, this is. I mean, this is
I
why
feel like this is
you're.
a changing role. This is like me trying to close. This isn't. This is kind of. I'm a bit of a rookie at this.
No, it's you just I guess confirming for all the listeners why you're the expert guest and I'm just the silly host who says dumb stuff in between the smart stuff that you say.
That's funny. Well,
So,
Dave, all the best in 2025. I'm looking forward to all our Tuesdays and enjoy the Azores.
and it is going to be a spectacular year of Stu's days. You know what they call the big. We just went through all the election primaries last year, but you know what they call the one day, because they're done on Tuesdays. A lot of the primaries, right, on Tuesdays,
Yeah,
where they lump all the big key states in together. They call it Super Tuesdays.
Super Tuesdays. Yep.
So it's going to be a year of Super Tuesdays this year, 2025. I believe too is the year of Stu officially.
Yeah,
A
maybe.
lot, a lot of people are hoping for that.
Yeah.
So Stu, thanks again, and all the best to you and your family too.
This recording has been provided by RBC Global Asset Management, Inc. for informational purposes only and is not intended to be investment or financial advice. You should consult your own legal, accounting, tax, investment, or financial planning advisors before engaging in any transactions.